Can you have more than one VA loan? The simple answer is yes. Hey everyone, I just wanted to do a quick video on how to maximize the amount of VA loans that you can have out at one time. I'm going to show you how to find your COE, how to read your COE, and how to calculate your remaining entitlement. That way you can go out and purchase as many properties as you can under a VA loan. And the reason I am making this video is because I have borrowers come to me and they ask me, hey, I heard that you can only have one VA loan out at a time. And I have to kind of tell them, well, no, that's not the case. Somehow a myth has gotten out there that you can only have one VA loan at a time. There are limitations as to how many VA loans you can have out at a time, but that's all based on how much entitlement you have left. So first I'm going to show you where to get your COE. So let me come over here, and where you want to go, and I'll link all of these down below, but if you go to the VA.gov website and you have to come in and you have to log in. Let me find, for some reason it looks like it already has me logged in. Let's see, let's refresh this and then sign in, and it gives you a few different ways to sign in. While I was in, I used to use DS login. That was kind of like my primary way of signing in, but now I use ID.me. So it'll authenticate, ask you, then text you a verification code, and I'm waiting for it on my phone. All right. VA entitlement, calculating it is a little tricky. It's VA math, for those of you that know, can be a little complicated. It'll take you to this page here, their front page, and then what you have to do is scroll down and you come in this area down here, go to housing assistance, and then if you scroll down, you can go here to how to request a certificate of eligibility, but it'll also link you, I guess I'll just show you this way first, how to request a certificate eligibility, then request a COE online, right here. And then when you do request a COE online, you can either request it, or if you're already in, then it'll give you the option to download your COE. So right here is, you click that download and it'll automatically download it for you. So I downloaded it here and I just kind of took some stuff off of it, that way you can kind of see. So it'll have a reference number, your name, the last four of your social, it'll say what branch you were in, this area here for your funding fee, whether you're exempt, non-exempt, and then you scroll down and it'll talk about, so for example, subsequent use funding fee, that's important, and funding fee here, and it'll say you're exempt because you're collecting disability, and it'll say how much you're collecting disability. That's a number that I use whenever I'm pre-qualifying somebody. Because I can pull other people's COEs, I pull the number from there and I count it towards their income. So I made up a COE here for the sake of being able to talk you guys through some of this stuff. So alright, I changed some of the numbers, that way you can kind of see. I made it non-exempt COE, and so this is just based on like a property that I bought back in like 2014. So I put the old numbers in here as to what they would be. So talking about it again, like I said, it'll tell you if you're non-exempt, and that'll help you calculate what your funding fee is. Like I was saying earlier, another important part is the subsequent use funding fee. After you use the VA entitlement for the first time, you fall under subsequent use, so your funding fee charge is higher than your first time use. If it's your first time using it, you won't have this little blurb there. And then It also says right here, veteran is not exempt from the funding fee. Usually while you're in the military, you're not exempt from the funding fee. I see sometimes guys that got out from active duty and then they join the reserves. They're finishing up their time in the reserves. Sometimes they'll have like a portion of disability that they're claiming or that they get, and so they will be exempt. Let's see. All right, so calculating your funding fee. So these numbers right here are important. So a first home that I got, $235,000. How much entitlement that I used? $58,750. So that way you kind of know how these numbers work out. If you were to divide 235,000 by 4, you'll come up with 58,750. Let's see. What else do I got here? I don't think I have anything. So the next place you need to go to, well, let me make sure I caught some of this stuff that I want to talk about. So I talked about exempt. That's important because then you don't have a funding fee that you have to pay. Let me talk about funding fees a little bit. So first time use. So if you're using your VA loan for the first time, at that point you're going to pay a 2.15% funding fee. If you put 5% or more down, so 5% to just below 10%, you'll pay a 1.5% funding fee, and if you put 10% or more down, it'll be 1.25. And then subsequent use, you fall under this category, so that's where I was saying that your funding fee goes up. It'll go up to 3.3% on your subsequent use, and then 5% more down, you pay 1.5%. And I tell a lot of people when they're thinking about putting money down on subsequent use, 5% is kind of like the magic number, in my opinion. That's the best bang for your buck because you're saving yourself over half of the amount you would pay on a funding fee. So in this case, you're saving yourself 1.8% on if you're putting 5% down. So, you know, you're buying a home, put 5% down, you save 1.8% on the funding fee. To me, that's great. And then the juice, in my opinion, is not worth the squeeze to go from 5%, you know, putting 10% down to only save yourself 0.25%. All right. Let's see. So I did that. So let's calculate. Let me put it back on this page. 58,750. So go back over here. Once again, I'll link these down below. So what I use is this website. What's my payment? So let's go into Florida. So if I'm buying in Florida and I choose a county, let's say Okaloosa, and my purchase price on the home is going to be, I'm buying another house at, let's say, actually I'll use a large number this time. I'm buying a $800,000 house. And then the entitlement that I have already used was 58,750. Right, so with that, it'll tell me the Okaloosa County limit. These just went up within the last few weeks. So from 732 or 732, I can't remember, but it was somewhere around or 726,200 is what it went up from on county limits across the country. For the most part, there are some high cost areas where it'll be a little higher. So it'll show Okaloosa County limit, it'll show what I use, the 58,750, and then my available entitlement is 132,888. Something to think about. So when you, after your first use, you go into what's called bonus entitlement. So you have one VA loan that's taking up some of your entitlement, that's kind of, you know, off to the side, you have it, whatever you're doing with it. And then if you're going to buy another home, you go into bonus entitlement category. So it's saying that my bonus entitlement is 132,888. And what that means is basically I can buy a home for up to $531,552 and put no money down. Anything above $531,552, I have to put 25% down on anything above that number. So if you calculate it out, you know, if you do the math, for an $800,000 home, if you subtract out $531,552 and then you multiply by 0.25, that should come out to this down payment that I'm required to put down, $67,112. Okay, so the simple stuff is I can go and I can buy another house, $800,000, and all I would have to put down is $67,000, basically 67,112. All right, let's see. Now, you know, the reason of this video is to try to maximize the amount of VA loans you can have at a time. So if I had one VA loan out at $235,000 and it's eating up my $58,750, let's say I had bought another house at $235,000. So let's see, 58,750 multiplied by 2. Let me do that math real quick. I really don't want to do it in my head. 58,750 times 2, 117,500. So that'll come out to $117,500. So let's say I had already bought 2 homes under VA loan. So my entitlement that I would have had used up is $117,500. Now, what that means is that the bonus entitlement that I have left, and it'll show because you have used $117,500 in Okaloosa County, the amount that I can use without putting a down payment down at that point is I can buy another $296,552 home without putting any money down. All right, so I could have, under this case, 2 homes that I got. I didn't put anything down. However that worked out, you know, I bought one home and then I needed a bigger home, or I bought one home and then I PCS and I bought another home and then I PCS, and I'm looking at buying my 3rd home now. I could buy a house up to just under $300,000 and not put any money down. But if I were to buy an $800,000 home after buying 2, I'm looking at having to put a down payment down of $125,862. Now, let's say I used up, you know, let's do this. Now, let's say I bought 3 houses under VA loan, and then I'm looking for my 4th, right? Because I want a VA loan because I want that sweet interest rate. So let's do that times 3. So $176,250. All right, so I bought 3 homes all around $235,000, you know, between the span of, let's say, 2015, somewhere in there. So, or because of PCSs, you know, I bought one in 2014, 2016, and 2018. Houses were about that price in this area at that time. So 176,200, right? So then at that point, I'm looking at, I bought 3 homes, and it's looking like I've used this much entitlement. This is how much I can use without a down payment. And once again, these numbers up here for a down payment on an $800,000 house, because I have that little bit of entitlement left, I would need to put down $184,562. Let's see. So essentially, I could have done, you know, 3 VA loans at 0 money down, or zero down, and then I could even be looking at my fourth loan. But something to consider with that is going to be, the VA has to approve these things, so you have to meet certain conditions. So talk with your lender, and like for me, I can contact the VA and I can ask questions associated with your situation specifically. Now, so I think that's a big point to make, though, is that you could have multiple VA loans, and if you do it right, you can kind of stack them up. I would recommend getting a house at every PCS and then renting them out. So some big considerations with that is going to be, if you're buying a home and you have it under a VA loan, and once you move out of it, if you're renting it out for the future, make sure you rent it out to somebody, make sure you get a lease, and make sure that you put it on your taxes, because later on, when it comes to calculating the rental income for that property, the taxes are going to be the primary way to do that. So you got to make sure that you put it on your taxes, because then fast forward 2 years, somebody like I would have to go in there, I'd have to look at your taxes for the last 2 years, and I would have to kind of make sure that the rental income matches, because sometimes and I'm not saying people try to like evade certain things tax wise, but and make sure you're claiming the right numbers. If you're getting $2,000 a month in rent, make sure you claim it on your taxes, because if you don't, then later on it could come back to bite you. Because there are a lot of times that as a lender, I have somebody that's saying, yeah, my mortgage is $1,000 and I'm getting $2,000 in rent, so I'm making $1,000 a month. It doesn't necessarily work out like that, because then if I take a peek at the taxes after I calculate the rental income based on what's on the taxes, it comes out to much lower, and sometimes it comes up negative. Not necessarily that case, but I think there are a lot of times where people are surprised that they're not making as much for mortgage purposes on their rental property that they thought they were. What else? I think I covered everything. I think I showed you how to calculate your VA entitlement, and that way you will know that it's not just one house that you can get multiple. So try to maximize it as much as possible. Try to get and calculate it out as to how you can get as many houses as possible under the VA loan, because for one, county loan limits generally go up year after year, so your bonus entitlement, or what you can use every few years, may be more than what you're thinking. And then VA interest rates are, in my opinion, the most competitive and the best out there. So I think they generally beat out FHAs, and I think they beat out they definitely beat out conventionals. And so I think it's a great program, and my recommendation to anybody that's out there in the market for a home should use the VA loan first, just because you get the much better rates. And another big consideration too is when you have a home under a VA loan, later on when you're renting it out, let's say you were to buy one right now and you're buying it under these higher interest rates, and then let's say you PCS and you're renting the home out, once rates drop, you can refinance that home under the VA program or the VA like Earl program, and you still get great VA rates associated with it, versus if you were to do that with a conventional. Let's say you bought a home under a conventional and then you were to move away. At that point, that home is considered an investment property, and it's subject to investment property rates under or when you're looking to refinance it. So you don't get the better rates the same way you would get with a VA loan. So that's I think that's huge when it comes to having a home, having it under a VA loan and being able to refinance it later. And that's especially important in what's happening right now under, as interest rates kind of tick down, as the Fed in 2024 is looking to make cuts, and we'll see interest rates kind of drop slowly over time. Hopefully the sound wasn't too terrible. I'm making this from my truck because, well, my daughter had an appointment and I had a driver here. So Thank you for listening. Thank you for watching. I hope this video was helpful. Please like, subscribe. I'm trying to really get the news out on these little points that I make. So thanks again. I appreciate it.